In today's video, I'm going to show you a strategy that I've been using on the NASDAQ, the S&P 500, and gold to trade actively, and it's been generating some really good returns. I'm going to show you the full context, how it works, all that good stuff in this video. And first, let me show you something really important. This is a real brokerage account. This is a US stock market account. It's regulated, it's safe, it's real. I want to get that out of the way because a lot of times you'll see people using MetaTrader 4 on YouTube. And I've said this many times, and I'm not trying to bash anybody else, but if you see somebody using MetaTrader 4, it's not entirely trustworthy because MetaTrader 4 can unfortunately be manipulated. I've done a video on that. People can fake their results. They can make it look like they've withdrawn money, all that sort of thing. That's number one. Number two, as a US client, I can't trade things like XAU USD or US 30 or NAS 100 on a regulated US broker, which is where I like to park my money, especially when I'm working with a little bit larger capital size. I don't want to put it in a sketchy offshore broker. So that's a little bit of context for those of you guys who are US traders. We can still trade things like gold and the NASDAQ and the S&P. We just have to do it on a regulated entity, which for me means trading it on the stock market, which is my WeBull account, which is what you're looking at right now. Let me show you some results. So real quick, this is a weekly profit and loss, and I wanted to wait and show you this sort of stuff until I actually had a downturn in my trading. So I've been doing this for a while. I've been trading the S&P, I've been trading gold, I've been trading all those sort of things for a while, but here's what we're looking at. What you can see is a month by month breakdown of the returns on this account. And recently I've been getting smoked and I wanted to wait and to show you guys this sort of stuff until I had a downturn, so it just didn't look like I was having nothing but wins. This account is relatively aggressive, and when I jump over to TradingView and show you sort of how I'm approaching this, you'll see kind of how I'm working this strategy. But anyways, just from a return standpoint, let's take a look at some of these months. We had months where we're up $4,700, $3,100, $4,800, down a little bit, $2,500, up 17%, $19,000. I thought that was an incredible month. And then the rain started coming, and it didn't stop coming. 413, down 1,100, down 8,600, down 7,500. So just bear with me. This was some tough times. Then we had a swing back, up $12,000 for a month, and then $17,000 down, 7% down, $7,200, down 13% or $13,000, and up $23,844 in a month. So the reason I want to show you this is because, first of all, I'm not just showing you huge numbers without the risk. There has been risk on this account. I have taken this account from, at this point, a $100,000 deposit. It's up to $173,000, as you can see above my head. So this thing has gone really, really well. And let me show you the trading strategy. Now we'll jump over the charts and we'll explain actually why we had such an ugly period of time right here. Like what caused this and what caused these amazing moves. Let's jump over the chart and I'll show you the strategy. Okay guys, so now that you've seen some of the results, let's talk about the strategy behind the results that you saw. Transparency, those results that you saw are not just normal results for me. They have been taken on a relatively aggressive trading account, and I don't recommend anybody to do exactly what I'm doing. I am fully aware that I am taking high levels of risk to sort of grow that account. It's been an experimental process for me, and it started out at a $50,000 deposit, and then I deposited another $50K. So overall, it has grown a substantial amount, but not without taking good bits of risk. Hey guys, I just wanted to jump in here also and mention that if this is something that you're interested in, if you like the idea of trading the S&P 500 or gold, we're going to be doing more of this, a lot more of this inside of our Discord channel. If you like trading those assets and would like to do that with us, consider joining our Discord service down below. There is a link in the description, and if you use the promo code YTVIP, you're going to get a really big subscriber discount. Also, if you have any questions, I'll link one of the Telegram chats to one of my team members there where you can ask any questions you would like. Thanks very much for watching. Back to the video. With that said, let's talk about the trading strategy. Now, this is actually going to sound, if you're familiar with my channel, it's going to sound a lot like what I usually do, but there are some special cases because in this case, we are trading two primary assets. We are trading the S&P, SPX 500, or SPY, because on my WeBull account, I can't trade SPX 500. It's just, you can trade the SPY, and also SPXL. Now, just context, again, I can't trade SPX 500. SPXL is just triple leverage. It's basically the ×3 movement of the S&P. So again, like I said, there's risk involved. The other thing I've been trading is XAU USD, okay? And let me talk about this. I can't trade XAU USD, but what I can trade is GLD. Or if I really would like to, I can do options. Okay, so these are some things that I've been dabbling with in the last 2 years. Now, primarily, it's going to be much of the same of what you're used to, but there's one thing here that I want to mention. I am only and have only been going long. Okay. I'm only buying these two assets. I'm buying the S&P and I'm buying the gold market. I have not shorted either one of these in the 2 years that I've been trading on this trading account. And I was primarily looking for appreciation only on these assets. Why is that? Well, we'll talk about it in a few cases, but the first thing you should know is that I've only been buying these things. I have not shorted gold. I have not shorted the S&P 500. So what we're talking about is a long only trading strategy. Okay. Now this is not a day trading strategy. This is not a 5-minute scalp or anything like that. What I've been doing is basically swing trading these assets, and much the same as I do with currency pairs, I am looking for asymmetrical returns. Now, what does that mean? Let's see if I can even spell it. Metrical. Is that right? Can we get a spell check on the edit? Asymmetrical. Is that correct? Hopefully it is.
Well, it looks good to me.
I'm not sure if there's 2 M's or 1, but I think there's 2.
Always 2 there are.
Regardless, what I'm looking for is asymmetrical returns. And you may be like, well, what the heck is an asymmetrical return? An asymmetrical return is basically something where you take a small amount of risk for this off chance that you may get an incredible amount of reward relative to it. And if you're familiar with my trading style with the currency pairs that I do this all the time. I'm looking for something that's trending well. I'm looking to buy a pullback, and I'm looking to try and hold it and trail stops. That is basically what I'm trying to do on this account. But with the S&P 500 and gold, I'm only taking longs. And let me show you some of the awesome returns that have been happening on the S&P 500. Now, remember, I trade SPY and SPXL, which is the same thing as the S&P 500, or SPX 500 if you're on currency brokers. Now, let me show you this. This right here, you guys, this is where the money came. Okay, this is a huge run up that we saw post pandemic. And call it what you would like, when we had the 2020 drop, I bought this thing aggressively and bought dips in this trading strategy for a year plus. A year! So if I'm being honest, this is why I don't think I could do these sort of returns again just as easily. I caught a once in a potential lifetime dip, and I bought and closed, and I was in here buying and selling the S&P 500 over and over, using the same simple support and resistance concepts that you guys see me use on the channel all the time. But in this case, I was looking long only. I wasn't shorting. So my win rate happened to be really quite high. And do I think that this strategy still exists today? Yes. I think that the S&P 500 generates these amazing situations where you get a bull market, but we'll talk about that in a second. The first thing I'm looking for is a breakout, right? So what I saw in 2020 was this huge break the other direction, right? So we saw this huge upward candle, and I said, despite everything looking like the world is going to end, I'm taking a high risk knowing that there is this potential to buy this dip that could be a huge winner. So what I ended up starting to do is I started looking for structure breaks, right? So I'm looking for situations like this, where you get a breakout, right? You get this big momentum push, and then this market comes back, and I was in there transparently buying pretty aggressively. I would buy a pullback like this, and what I would do is I would say, well, okay, I'm not going to let this thing slip back down to the lows or anything. I am going to put a stop on the trade. So I'd put stops in there, but then I would not limit the trade. So what ends up happening is you get a situation in which you get that asymmetrical return that we talked about. So let me show you this. Okay, so we're looking at this situation. Price comes down to a level like this, and let's say I take a buy, and this is a trade that I do remember taking. I was long during this time taking buys in here. So even though this was a long time ago, these were the sort of returns that you don't get very often. Like I said, it was a once in a lifetime market environment for me where I was able to produce some really serious profits on high risk, full transparency. Price comes down and I enter a trade, right? At that 38.2% retracement level, it lines up with support. Everything is looking nice and I go in pretty heavy. Now my stop loss is in place under market structure, but my take profit is nowhere to be seen. In fact, what I'm looking for is I'm looking for a situation where I can actually enter the market. Let's say that this is my entry. Let's make this, we'll make this green here. Actually, we'll make it blue. We'll make it blue, right? And then on the contrary, my stop loss is down here, right? So my stop loss is in place and I'm saying, okay, here is where I will stop out of the trade if I'm wrong about this. Let's take this off for a second. Let me show you what happens, right? So markets started moving in my favor. How do I manage the trade? Well, first, the entry is relatively straightforward. We're looking for broken levels of resistance, a bullish market, and we're looking to buy that pullback. So a simple break and retest, as simple as that concept is, you hear it over and over on YouTube. I have been able to generate some huge profits with that simple pattern over and over. So once we see the break and retest, I'm looking to get in, but I'm looking to ride a winner. And this is where you hear the mantra, let your winners run. Well, this is what I was doing. The market basically came to me. I was able to catch a buy trade. And then as soon as that market would move 1 times the distance in my favor, meaning I risk, let's say I risk $500. As soon as this market moves $500 in profits, I'm taking that stop loss and I'm trailing it to break even. Okay. Once that stop loss is in break even, we are in the golden zone because from here, now we manage the trade. And here's how we do it. Let's say this market rallies past levels of resistance as it did here. Once it breaks through that resistance point, I'm going to start trailing the stop loss up. Right? I'm locking in stops. After we put in a low, okay, cool. Trail in that stop. After we rally off and we put in a new high, okay, cool. Let's lock in some more on the trade, right? And then we continue to do this. And this is how, guys, we get the asymmetrical return. So let's say finally that, I don't remember exactly how this trade played out, but let's say that we're able to hold in from market structure. And then finally we break back the other way on this candle here and we stop out. This is a huge win, right? Remember, if I risked $500, that would net me what, $3,000, right? And that's what I did over and over and over. So then I'd be looking for another opportunity, market structure, highlight the spot, looking for the price action to come back to me. And same thing. Let's say I bought this level of support. Again, market structure using price action, no fancy indicators, nothing like that. And I'd buy it again, right? So I'd buy a discount. I'd let this thing rally. And then once we put in a higher low, I'd be trailing. First, I'd be trailing to break even. Then once we put in that higher low, I'd be looking to trail stops here. So then, you know, markets break out again. We get past that level of previous resistance here. On this candle, I'm looking to go ahead and trail that stop loss further. Where am I putting it? Well, the most recent low we could probably argue for right here, right? So we don't want to see that low get taken out. And bam, we're off to the races again. And this is how, you guys, I was able to generate such crazy returns. Again, as I mentioned over and over, you know, I don't want this to sound like, oh, I just could do this every day. Like I definitely could not. It was a once in a lifetime situation to trade that 2020 rally. And, you know, sometimes I miss it, to be honest with you. It's still kind of happening. We're still seeing some craziness. But in the last year, 2022 has been a rough ride. And that's what I want to talk about in a second with those negative returns that we've seen in 2022. Because remember, I only went long in all this time on the S&P, et cetera. So anyways, I'd be trailing stops. And then finally, that market would break back the other direction and I'd be out. And I did this over and over and over for like a year straight. Frank and I, who is one of my he works at A1 Trading, my company. Him and I were sitting desk by desk all summer for when he was there, and we were just sitting there buying the S&P, buying it, selling it, buying it, selling it. And you know, then in 2022, this is where gold comes in. Gold was also sort of always a part of the story. In 2020, we caught some amazing runs on gold. In 2021, we didn't have such a good run. We caught some losses on gold because remember, long only, right? But then we caught some good here. And then we caught some excellent returns in 2022 on the gold market, right? Letting a winner run here. As you can probably imagine, if you caught this thing, this one's hard to mess up. So let's say, and actually we do have some examples, we bought the gold market several times in this run up, and we're able to catch some excellent risk to reward opportunities there. Of course, once it starts going back down the other way, at certain points we cut the idea. If it's just falling, right, we're not looking to buy that. We're looking for something that's trending, right? As we've talked about many times on the channel, if something is trending well, we're looking to buy it. If something is not trending well, then we are out of the way. And by the way, I did mention this earlier, most of these were swing trades, primarily off of the 4-hour and 1-hour charts, which has been the bread and butter for the way that I've been trading this sort of system, both on the currency market and in the indices and gold market as well. So again, the idea here is basically this. I am looking with every trade that I take with this sort of strategy, I'm taking a low risk approach, or not low risk, low risk relative to a high potential reward. Now, when I say that, this account, as I mentioned, was pretty high risk. I was risking a good bit of money per trade. I was letting winners run, and I was being super long biased with my trading, which is why when we look back at that negative period recently, take a look at this. This is where we sort of messed up. And not really messed up, but just had a not so forgiving market environment. We tried to catch dips. When we were back here, like I said, if you're buying dips here, as you can probably imagine, it was like amazing money. And part of the reason was, and we should probably talk about this briefly, we've talked about it many times in the channel, this was the awesome Fed printing machine, right? The Fed drove this market higher with their super dovish stance. Frank and I looked at each other one day and we just said, man, this stock market, it's like every single dip gets bought because they're pumping money into the system. That scenario is not what we experienced in 2022. So we got caught up trying to still sort of trade that strategy and had to adapt a bit and take less aggressive stances on buying the S&P once that Fed printer stopped. So what I want to show you with this trading strategy is, yes, we were buying dips. Yes, we're trend following, but key note here, we also incorporated the fundamentals to all of this stuff. When we've seen that the Fed sort of stopped that super dovish and printing money machine and actually started going hawkish the other way, that's where we started slowly shifting gears from being so buy heavy on the S&P 500 to normalizing a little bit and being a little bit more picky, looking for breakouts and looking for opportunities to still only be long biased, but be a little bit more conservative with the trades that we were taking. Like I said, during this time, the only way we were able to grow that account like the way that I did was through super aggressive buying of dips when the market was very favorable. Will that environment come again? I think so. I think it's possibly, possible that we're starting to see a healthy run up again. We've seen an incredibly impressive downside to the S&P 500, down 24.5% at the peak from peak to trough there, right? So we've had a really big sell-off, and now we've started to see a break to the upside, right? So we basically, like I said, full transparency, I don't think that these are sort of returns that I could do on a consistent basis. In fact, I don't plan to try and do that again, because it was a situation in which I analyzed everything that went on, and I very well could have taken a much steeper drawdown than I did. I began buying stocks and indices and trading this strategy as early as March and April of 2020. Now, I also bought back here. So to be completely fair too, I also bought stocks once they started hitting like a 15% down point. So probably somewhere around here. And I took some serious drawdown during that time. So I don't want to act like I just I nailed the bottom. But around this time, there was an announcement from the Fed. And the Fed basically said that they were going to be doing some super printing of money, that they were going to be, cutting interest rates. All these sort of things started rolling out one after the next. And like I said, we just, Frank and I took that as sort of our cue. We just began buying aggressively, saying to ourselves, hey, we've been in stocks for a very long time and we haven't had a dip like this in years, right? These lows, and I'm going off on a tangent now, these lows were as early as like 2017, right? 2017 lows or highs, I guess. But the point is, We saw a major dip. We bought it very aggressively. We traded a strategy when the strategy presented itself. It was how I was able to double this trading account at the time. And it went from 50 to at one point like 135, and then the 135 back down with the 2022 sell-off, the tech crisis, or whatever you would like to call it, the tech sell-off that we saw in 2022 took a big hit on the account. But then now we've been sort of recovering and looking for that bull train to run again, and that's the key thing. In order to capture those asymmetrical returns, it's very important to analyze the markets that we are looking at in a way that, okay, we're looking at the environment we're in. Right now, we have seen a really ugly 2022, and now we are analyzing, are we actually starting to see a new trend erupt to the upside? And what we could make an argument for is a simple moving average switch, right? And, of course, during this time when all the moving averages like that are beautifully lined up and we can find pullbacks and price action strategy entries that make a lot of sense, that's where we can get potentially that asymmetrical return. That's how I did it, and that's how I plan to continue to trade this. I'm looking out for 2022 and perhaps 2023, this thing to switch back into a bull. If it happens, right, I'm just going to be reactive and continue to buy dips. Not so aggressively, though. I will say my forward plans with this trading strategy and this trading account is to go much more conservative. I appreciate that I don't think I'm going to be able to double and triple an account of this size going forward, and I do plan to take this thing much more conservative over the coming years. I think that like I said, I took advantage of a once in a lifetime situation with the COVID sell-off. And that's sort of how I've been playing it and plan to go forward with it. So like I said, if you would like to see the stuff that's being shared in the group with this sort of strategy and how I'm approaching the markets, then please feel free to sign up down below in the description. I invite you to join us there inside of our community, and hope to meet some of you there. Thanks for watching. Looks like it's time for your next trading video. Check out the videos here and here for more free trading content that should help you in your trading journey. We try and keep it real here, so make sure to subscribe for more content that is down to earth, realistic Forex trading content. See you in the next video.